This is Natasha DeSouza reporting for SALT Voices, and I'm here at the inaugural SALT Abu Dhabi with Jason Mudrick, the Chief Investment Officer of Mudrick Capital Management. Welcome to Abu Dhabi, Jason.
Thank you.
Thank you for speaking with us today.
Sure.
Tell me a little bit more about the panel that you were part of yesterday. We had some very interesting luminaries and minds within the hedge fund space, take part in that discussion. What were the interesting takeaways for you?
So the title of our panel was Hedge Fund Opportunities in Modern Markets. I thought it was a very interesting panel. When I brainstormed with the panelists, all four of us did invest in very different ways, but we all came to very similar conclusions.
Okay.
In modern markets, we've seen two big advancements over the last 20 years. First, markets have gotten hyper efficient, particularly equity markets.
Okay.
So 20 years ago, you had hundreds of hedge funds managing hundreds of billions. Today, you have thousands and thousands of hedge funds managing trillions of dollars. And 1 in 3 of all equities traded on listed equities traded every day are traded by computers. Okay, so if you think about what hedge fund managers are supposed to deliver, which is alpha, we're supposed to have edge. Being able to beat the markets today, given the competitive landscape with thousands of competitors and computer-driven trading, is not impossible, but very, very difficult. We all agreed with that. So where do we find opportunities in modern markets? We focus on the credit markets. Computers can't trade credit, particularly event-driven credit. And a lot of the newer funds that have come into the industry, it's very difficult for them to trade event-driven credit or distressed credit. It's a very resource-intensive type of investing, and it's also very illiquid. So you need to have longer lockup vehicles, private equity-like vehicles, and it's very hard for new entrants to do that. Most of them are launching with monthly or quarterly liquidity. So our focus on event-driven credit is meant to insulate ourselves from a lot of what has made liquid equity markets very, very efficient. It allows us to continue to generate alpha, have edge.
So in yesterday's panel, you said that you had, participants across, the space with different and possibly divergent viewpoints, but you ultimately all had the same conclusions. And what I'd like to know is at Mudrick in particular, what is the lens at which you look at opportunities, for your clients? Where do you kind of have your finger on the pulse? Where do you think things may be headed? Where are the opportunities?
Yeah, so our focus at Mudrick Capital is distressed credit. In particular, people know us for doing a lot of middle market credit. If you look at the leveraged credit market, so leveraged loans and high yield bonds, it's gotten very, very large over the last 10 years. Back in 2008, it was 1.3 trillion. Today, it's almost $3 trillion. That's sort of our sandbox, if you will. So very large opportunity set. 2/3 of the issuers that comprise that 3 trillion are small and mid-cap issuers. So the US, this is the US market I'm referring to. The US market is made up of small and medium-sized businesses. One of the things that I think people like about our firm is that we are one of the smaller distressed credit managers. We manage about $3 billion, but a lot of our competitors are folks like Oaktree or Davidson Kempner or Centerbridge that manage vast sums of capital. A lot of times, some of these smaller deals, the $1 to $2 billion deals, aren't really worth their time, but it can really move the needle for us. So we're operating in a big universe with very little competition, and that creates interesting opportunities.
So take me through Mudrick's ethos when it comes to, the way you're looking at, distressed opportunities, potential deals. What is the lens that you're looking at? How are you receiving, I think, through all of these opportunities, like you said?
Yeah, so as I mentioned, it's a big market. The one characteristic I would say about the market is that it's not very liquid. So there's not a lot of trading of these securities. There's a lot of upfront work, almost like a private equity firm would look at a deal. So we tend to do 3 to 6 months of due diligence before making an investment. Because a lot of times you're going to end up holding these things for 2 to 3 years through a restructuring into post-reorg equity and then into an exit. And that can take, sometimes 3 years, 2 years, 4 years. So you got to do your work up front. So
in the market that we're in right now, what would you say is a healthy kind of return within that space?
We're targeting 20% returns in any investment we make. Given the liquidity profile and the length of the hold, if we're making less than that, it's usually not interesting for us.
And then what about, here in the Middle East? I guess how are you kind of looking at this part of the world? Perhaps, with your work at Mudrick, but even in general, in terms of investment opportunities that you think are especially, exciting?
So we don't invest outside of North America. So we're not here looking at investment opportunities. We do have clients here and potential clients here. And I was also honored to get the invite by Skybridge They put on an amazing conference. I think they had almost 1,500 participants, just pretty spectacular given its inaugural event.
True.
So we're really excited to be here.
Okay, wonderful. Well, it's been great speaking with you.
Yeah,
Thank
great
you for
speaking to
taking
you.
the time
Sure,
today.
thank you.
You so much, Jason.
Bye-bye.